Hello and welcome to the Adansonia Capital Global Opportunities Portfolio Update for March 23. Our disclaimer for you to read. To move forward, I'll take it as read. So the performance for the March month and the March quarter were pleasing for the portfolio. For the month of March, the portfolio outperformed by around 3 basis points, and for the March quarter, by over 4%. Gains in the market and the portfolio were driven by receding worries of recession fears in developed markets, and also that inflation pressures were starting to moderate. Growth stocks largely outperformed value over the period. However, we continue to remain relatively guarded on the earnings outlook for corporates, and as such continue to carry a fair amount of cash in the portfolio, around 12%. Nothing was traded over the month of March in the portfolio. So this month's stock is JP Morgan Chase and Co. Probably quite a typical discussion to have, given that there's been a fair degree of turmoil in the US banking system, or the US banking sector, with the closure of 3 US banks, namely Silvergate, Silicon Valley, and Signature Banks. However, these closures were largely, well, you could argue idiosyncratic in terms of the nature of their balance sheets. These banks had high exposures to US treasuries, where rising interest rates basically pushed down bond prices and obviously the value of the bank's capital reserves. Also, some of these banks had exposure to cryptocurrencies and cryptocurrency firms. However, on top of all of that, you saw a Moody's downgrade on the US banking sector, and all of these potentially have flow-on effects for net interest margins, which we sort of talked about in this slide. However, JP Morgan, which is our only exposure to the US financial system in the portfolio, has been very vocal about their investment in overpriced US treasuries. And the CEO and chairman, Jamie Dimon, basically said he would touch them with a barge pole. And also over the period, the Fed expressed confidence in the resilience of the US banking system. And the investors over the period, largely, despite some near-term turmoil, shrugged off any fears of systemic risks in the banking system in the US. So JP Morgan basically has 4 key divisions: consumer and community banking, investment banking, commercial banking, and wealth management. So a far more diversified earnings stream than what you see in Australian banks, which are largely savings and loans. And also, it's a quality bank, and it's anchored by what they describe as a fortress balance sheet with a high Tier 1 capital ratio. Banks are basically beneficiaries of rising interest rates, and after 2 years of negative operating leverage or negative operating margins, we forecast that JP Morgan is going to have a 4% is going to enjoy a operating leverage of 4% in 2023, with revenues growing 12% versus expenses by 8%. However, with the bank continually investing through the cycle, we believe there's positive risk that expenses will do better than 8% or be less than 8%. Furthermore, the bank continues to basically grow on the consumer side, and it's opened 5 new branches since 2017. Again, something starkly different to what's happening with Australian banks, which are closing branches. And also, essentially, with the flight to quality, we believe that the bank will also be a beneficiary of a migration of deposits to banks with better balance sheets. So, over our investment horizon and weighing up risks and rewards, given obviously that there may be some near-term turmoil or near-term pressures or macro headwinds for the sector, we're comfortable with our exposure to JP Morgan, and the bank is basically trading on a very modest PE of 9 times. And we value it conservatively at $153 a share, with just more than 20% upside on the current share price. So that's the end of the update for March 23 or April 23, talking about the March 23 performance of the portfolio. As always, Tony and I are continually thankful for your support and are always available to have a chat. Our contact details are on the bottom right of this slide, our mobiles and our emails. And also, we can be contacted through the inquiries email on our website. Anyway, until next month, please feel free to give us a buzz and I will talk to you then. Thank you.